Welcome. 2 days before the end of the year. Very, very slow day, as we've been kind of cautioning about all week. Be careful, don't do much. I have a few option positions personally, that's about it, and a little bit of futures. Remember though, options, when it's this slow, you're going to lose in vol. Your Vega's going to fall away because volatility's low, and there's a lack of interest, a lack of movement. However, that said, there are opportunities in that should the market break out of the range. So without further ado, let's go through. We'll start off with the S&P. So as we know, let's go through before we look at the chart. So the strength today, when we talk boring or slow, however you want to word it, you're generally thinking of the Dow, and true enough, it had its second consecutive update today. It was up 148 handles, up 0.4%. The S&P was up 11 handles, so a decent day, but still sitting underneath that 4,800 on cash, and obviously 4,800 on futures. So both, there's an 8 handle difference pretty much there. Big, and we've spoken about a number of times, it's a big open interest line. Obviously, it's a psychological level, 4,800, so it would need to get above there and hold above there to force more option selling. I would imagine most shops have been doing that given where vol is. Nasdaq fell again for the second day in a row, down 20 odd handles. The Russell was actually up again today. Advanced declines for the NYSE, the broader market. The advances were actually up on the day, 1700 versus 1500. And Alex will talk about this a bit later, but the Nasdaq again was weaker, 2700 declines versus 1800 advances. Apple was pretty well dead on the day, up just 9 cents. And as we know, the obsession is to get that to 180, 286 to make it a 3 trillion market cap. Can they do it before they ring in 22? As far as Europe goes, Germany and France, actually everywhere closed up, I believe. As far as that goes, I'll look at that again in a sec because that looks like old data. And as far as breadth goes, and again, Alex is going to talk a bit about that in a sec, but 8 out of the 11 S&P sectors closed higher, and no sector, usually there's an outlier, no sector was over 0.7 today. Healthcare and real estate were the two strongest. The weakest was energy, then communication services and financial. That communication service has been off for a bit. In the Treasury market, we had a steepening the yield curve. We did have an auction today. The 7-year notes went through of a high of 1.48, and the bid to cover was 221, so not too bad. The 2-year was unchanged at 0.7. The 10-year rose 6 basis points. Remember, I was saying that was steepening, meaning the further out, the higher the yield, the weaker the bond. Dollar was pretty well negligible, 95.91, the index. The big news today is what people jumped on was Biogen was up a massive 21 bucks, which is 9%. And there was a report in the Korean Economic Daily. Have you got your copy there, Madavi? Nice and handy.
Oh yeah.
Indicating
Anything?
that Samsung is in negotiations to buy the group for 40 billion American dollars. And there is some basis in that because apparently they have some joint ventures. And of course, it's all down to sources, so we're used to that. So Reuters has passed that on to the Korean Economic Daily, just to quote your sources. Economic news, we had a record high in international trade in goods. Not quite the 100 billion, but already there, almost there for 97.8 billion for the month. Pretty good effort. Wholesale inventories are out. They rose 1.2%. Pending home sales was down 2.2%, which was expected to be up. So you could argue that that was balancing out for that big jump of 7.5% in October. Oil had its EIA report today, and that came out pretty much as expected. We had a draw of 3,500 barrels versus 3,100 expected. Cushing was a little bit lower build of 1,055 versus 1,500, so that was bullish, and that's why WTI moved up. Also, it was bullish. The draws were larger in gasoline and distillates. There was an increase in production at 200. So oil companies, even though they're so hamstrung by the negative flow as far as the mainstream media goes, and bankers weren't meant to lend them, and that's all obviously hurting everyone now that oil and gas is so expensive. But hey, are they going to admit that? I doubt it. Gold was settled down $5. Silver was pretty well flat. And that's as far as all the facts goes. Let's go through the charts. You can see, all you need to see on S&P is how flat it was all day. Look at that, just sat on the cloud all day. Let me just, so you can see all that there on the, just dead set, flat. The bullish would suggest this is a bull flag. From a bullish point of view, it actually gives us more room. Should we get through that 4,800 roof, we can get up to that, to the top of that channel, and plenty of room there. That's still under 8.8 on a Murray math basis, so plenty of room there. Daily, same thing, nothing really to report there. We won't spend too much on that. Nasdaq, much weaker than it. Bear in mind, if you compare this to the S&P is up here, right? So we're well underneath that cloud. It's a 30-minute chart. But it did come off its lows. It did spike down there and gave you a nice little trade. If you were trading, you were trading Nasdaq futures today, weren't you, Manova?
Yeah. I was not a lot. I didn't do much futures. I did a couple of trades. I went short when the Nasdaq was up 40 points in the morning, and then it went down to 80 points, I think, and then it bounced up again, and it got up to like almost negative 30, 25. I got out, did a couple
Yeah, never got positive by looking at it.
Didn't do much. I basically played with some mostly stocks today. Biogen. I did the Pop. I played that.
Oh,
And it worked
Pop,
out.
the one from yesterday. Yep.
And then the C-Pop, I'm still in and trading it. That's made a little bit of money. And now I'm trading a little bit of Naked. And I traded some other stock too. I forgot what it was. Oh, Victoria's Secrets. I did a little short on that. So
Yeah, that's that VSCO, right? I saw you and Johnny were trading that when I came back.
Yeah.
And for full disclosure, I was out of the office for most of the day today, Pete. So, pretty well all I did was pretty well, as I said yesterday, was buying some cheap optionality and I stayed in it, the Spider and Apple, and I had some S&P futures. Didn't have any oil because I was out of the office when that EIA was to drop. So, on Russell, you can see it's doing stronger than Nasdaq. I mean, look at that. At least it held it sideways all day. It was obviously higher at one point today, but just held in there. And I mean, this is a market where it's really good to sit on your hands and listen to some music, or whatever you do some homework and keep an eye on, but be observant to opportunities that may arise. Nvidia did stage somewhat of a comeback, but still was well off those lows, but well off those highs of the other day. Oil, let's have a quick look at that. Just stuck in, it's under the cloud as we're expecting on the daily. You can see on the out, and this is where Ichimoku can be very useful in a thin market, but a deep product such as oil. You can see it did a nice little bull flag, hit the cloud. Again, I wasn't here, so just looking at what it did here, it bounced off that EIA report. And there's a full breakdown. That's a really good product. Around the barrel and in the vortex are popular, very popular on trades community, and the data comes from some of the best in the business. So check that out if you haven't. Let's have a look if oil was actually a good trade or not, if we would have got into it. So yeah, it got over that cloud. It actually went, remember, it opened under the pivot. So there we have that run. And that's pretty well all it did, just go up after the EIA report. You got your pivot, your bright pink number, got back to Tankin, and the high was almost R1. Didn't quite get to S1. Your trading basis would have been this cloud, and then when it got over this. Okay. This time of the year, for oil companies, it's all about making sure they're getting the biggest tax benefit they can get. So think of yourself as an oil company when you're making that decision, if you're doing something longer term, more than just scalp. Natural gas is still just in this messy flag on the daily basis. This is going up and down basically 20 handles on two things, weather reports, and it seems to be the speculators open up and put a position on basing on what Europe does. Again, Europe has nothing to do with the Henry Hub, which is what you are trading if you're trading natural gas futures. And you can see again, look at that, up, down, up. It's just a mirror image, 20 points. And these are big points. Natural gas futures are one of the bigger ones. So that's pretty well all covers everything there. As far as what happens, Alex is going to go through the spreads on the market here. Alex,
yeah, let's talk a couple different market internals here, just because today was a day where even though there wasn't a lot of volume and there wasn't a lot of movement at the surface level, there was some things happening that, probably all put together paint an interesting picture, at least one that I'm taking a look at. So first and foremost, we had a bear steepener with the way that yields were rising on the long end, and we didn't really see rising on the short end of the curve. So it was kind of a message that sometimes can mean that the market's concerned about inflation or the increasing potential of rising rates from the Fed, or both. So we did see that put some pressure on competing long duration risk. A lot of the growth factor was out of favor in the small cap side of things today, especially as were high beta large caps. So looking at the factors from strongest to weakest, mid cap growth and value were well bid, as were large cap low volatility. And the weakest was large cap high beta. Small cap growth did have a tepid bid, as did large cap growth, but we're talking about between 0.3 and 0.5%, so might as well call it flat. But that does show, there's more of an appetite for things that are either, if they are growth, they're a little bit more stable than the small caps, a little bit more perhaps higher quality. And then if they're not bidding that growth, they're bidding value and low volatility large caps, and then to a lesser extent value large caps as well. In sectors, we saw a picture of home construction, real estate, healthcare, water resources, retail, utilities, and infrastructure really having the strongest bid. And then on the downside, the weakest by a lot were things like silver miners, clean energy, airlines, and solar. So, there was definitely a pretty big variance across the sectors. This wasn't necessarily a pure late cycle theme. I think there was a little bit of a mix of safety in there, as utilities were also reasonably well bid. So that's interesting to look at. The breadth across the market wasn't anything to write home about. On the New York Stock Exchange, it was 17 to 13 advancers to decliners with 5 unchanged issues. So pretty much a yawn. And then on the NASDAQ, it was kind of ugly. We had 20 advancers to about 25 decliners and 5 unchanged issues. So, if you're looking inside the NASDAQ, you're actually seeing that even across the heavyweights, there was some dispersion. You had Apple, Amazon, Google, Tesla, Facebook, Nvidia, Netflix, PayPal, Adobe, Texas Instruments, Intuit, AMD, and T-Mobile, they were all down. Microsoft, Comcast, Cisco, Pepsi, Costco, Broadcom, Intel, Honeywell, Qualcomm, Moderna, Starbucks, Charter, Intuitive Surgical, and Applied Materials, they were all up, especially Moderna getting a little bit of a relief rally after a pretty difficult week for it. So, the market seemed like some of the more high beta stuff and the more sort of rate sensitive or long duration risk wasn't really well bid. Across the heat map today, a lot of the mega caps were pretty flat, like Microsoft and Google and Apple. Amazon down a bit, and then you really saw better bids in areas of the market where less techy, healthcare, consumer defensive, real estate, industrials, basic materials. They all kind of had a bit of a bid as utility. So it felt to me like people were taking some profits, or in some cases realizing some losses before the last trading days of the year, and we're also seeing a little bit more of a bid for some of the areas that are probably considered to be more reasonably valued and a little bit safer into an environment where we have both a slowing economy and a Fed that is beginning to taper and talking about tighten.
Thanks, Kurt. Yeah, actually, I forgot to neglected it. Yeah, it's certainly, as Alex said, keep your eye on certain things, but you can see under the surface. And you would think most tax selling's done by now, but you never know. People do wait to the last minute. But one news item I meant to touch on, it didn't have that much of an effect, but Micron came out and said that the output of some of its computer memory is going to be hit by the closing, so the Chinese city of, I'm going to have to spell this, but I think it's Xi'an is how you pronounce it, but it's Xi''In. So China has shut down some of their cities because of Omicron. And looking at the stock, before that broke, it was trading around 96.70. It's now 96.06. So there's really not the fear, but Micron, remember, had a big move up after earnings. When was that? Last week, guys? 2 weeks ago?
Yeah.
So that news is out. The other news on Thursday, which would be tomorrow, Russian and American Presidents Biden and Putin are going to meet with Iran nuclear talks on the agenda, and they're going to do that virtually. So I could leave a joke there, but I won't, about the AMC guy sitting in for Biden, but I'll leave that alone. Not much out tonight. There's some data out of South Korea, which it's going to be a lot of focus on purely because of that Samsung talk with Biogen. So Madavi will fill us in tomorrow when he gets his early morning copy of the Korean news. Not much else really, guys. What do we have out tomorrow to excite the punters? So we're
Tomorrow's
Thursday, so
economic calendar.
Gas.
Yeah, so we have a natural gas, we have unemployment claims, and we have Chicago PMI
The PMI
all coming out.
Something.
And so that's not a lot of economic data, but it's enough to move the markets potentially, coming out at 8:30 with unemployment, 9:45 PMI, and 10:30 a.m. all Eastern time for natural gas. Friday, there is nothing on New Year's Eve. And I hope that a lot of people aren't trying to trade much on New Year's Eve, but it is the last day of the year that, some folks can do their tax loss selling, according to the IRS, especially for retail. So that is something to think about. You also have the potential for this JP Morgan hedged equity fund to be evening out on some of their sold calls. I think there's something like $6 to $8 billion of notional exposure that they're going to be buying into to become neutral. So that's something that may push markets up, depending on what kind of pressure we see over the next 2 days.
That's a good point, actually, because vol is really negligible. And I was saying, if I was in that position, I certainly would have been. And to me, it looks like, of size. I'll put it this way: they do it when you're not expecting them to do it. But I would expect them to have been doing it. And you notice we haven't really fallen, but vol's collapsed. So that's a good time to do that. Yeah.
Does that usually happen every time? Sure. or every year
Well,
at this time?
so just think what it is. It's a quarter end and a year end and a weekend, like a weekly end. So there's a lot of if I'm short optionality, I mean, look, if you're managing a risk correctly and vol collapses, you want to buy it back because anything can happen, right? A lot of people do run it in. And I know people I think I'm joking, but the bonus factor is a relevant factor, you know.
Yeah.
So most optionality, and it depends on your tax situation, right? So options. I mean, I'm not going to be your accountant, anyone here. If you take my advice, accounting. So speak to your accountant, but an important part of if your tax is not just your income, but also option. If you're a professional trader, puts and straddles, and so obviously options going into next year are different to options that expire today, tomorrow, or the next day, right? So there's all those factors. But what we have seen as we looked at those technical charts, we got a pretty good bull flag. We know, as Alex said, we don't know exactly how much a lot of but they're all very similar. Hedge funds and mutual funds such as JP Morgan, and they got that specific fund that actually, I'll have Alex explain it a bit now because he watches it a little bit more than I. They have a specific fund just for vol, right? And so that's what he's talking about there specifically. So that, in addition to, you know, lots of people that have sold vol, just generally, you know, and it all depends on when they take it for taxation purposes. But yeah, sorry, Alex, go ahead, mate.
Oh, no worries. So JP Morgan has a hedged equity fund called JHEQX. And a couple of the folks that really follow options really closely on Twitter, like Andy Constant and Jem Carson, and another friend of mine, Sergey. They all follow this stuff pretty close.
Yeah, they're
And
very
basically,
good traders actually too. They're good record. If you're not following those two guys, do yourself a favor. You know.
yeah, really all three of them. Sergey's great too.
I'm
So
not too
Andy,
familiar with Sergey,
Jem.
but I do know the other. But I'm sure he's pretty good. If you've
Yeah,
met so many.
they're all. Yeah, oh, absolutely. Yeah, he's a quant. He used to work at Goldman. He definitely knows the stuff. So yeah, the JP Morgan Hedged Equity Fund, JHEQX, and basically, it ends up. Let me pull up Andy's thread because he's got a nice little thread. He kind of goes over this stuff, and we can link this in the description of the video for folks. But basically, the net impact is about $8 billion needs to be soaked up. And it looks like the way that gets soaked up is it ends up being about that much of buying demand for the S&P, which typically would move it something like, 2.5, maybe 3% under just like neutral circumstances. Obviously, it does depend on what the market's doing, what kind of supply demand situation there is in the market at that time. But it is something that we should be aware of if we're trading futures or if we're allocating into stocks or selling stocks. These kinds of events, as they get mapped out, people have followed this stuff throughout the year. It definitely has a tangible impact on the market, depending on what kind of balance or imbalance, it sort of creates. So that's been something that I've been trying to track. September had a negative impact when they made their move because it ended up, I think, costing, I think it was like $2.5 to $3 billion worth of pressure on the S&P. This is the inverse of that. And so if it's like June, it may actually cause some upward pressure on the S&P 500. So, and this has to do with the hedged equity fund that JP Morgan manages. Basically, the goal is to try to minimize the volatility. So they have this strategy, and I think it's called like a seagull, where I think they're selling a call, buying a call, and then buying a put or something around that. I'll have to look up the thread about that. Sergey did a great thread about that as well.
Yeah, the put's but stop loss basically. Yeah.
Yeah, so it's a really, it's an interesting strategy. It doesn't really generate a lot for the clients, but it's relatively, I guess, safe. There's been some talk about maybe the execution. Oh, of course, yeah.
Actual check this out.
Yeah, that's a fair point. And that works out pretty well for them. But yeah, I mean, ultimately, I think that it's these kinds of events are things that we should be keeping an eye on because as market participants, it can have an impact on price discovery, it can have an impact on what you're seeing, and sometimes what you're seeing, is it's just as important to know why you're seeing it than just what you're seeing. So let me go ahead over here. I've
Yeah, I
got the
would think
fund.
that's even more important to understand. It's very, like, we get a lot of questions about, for retail trades, what the professionals do. Well, there's different parts of it, but it's something you need, it's interesting. So people, how do I say this? So if I want to become a doctor, I just don't learn it part time, a little bit of internet, and then expect to know it all at once. So to become a trader, I mean a professional trader or a professional investor, whatever you want to call it, it does take a, a lot of experience, a lot of time and effort to do it. And little things like these sound not important, but they are very, very important. And I
Yes.
always try to say, get in the head, like I tried to explain today, why 4,800 was a big level on cash and physical being SPX, and the ETF SPY, of course, is related to it. So it's little things like this, but in multitudes of just simply protecting your asset, which in this case, if I'm a seller, it's a premium, right? Or the premium. And if you want to look through the thread that we have on natural gas and oil every Wednesday and Thursday, you'll see some really good commentaries by some of the best in the business in options. Like, that's their job. On oil and gas, it's even more significant because of the seasonality and the cost of delivery, etc., etc. But this thing is a major part in the thin market that can move it. There was 1 month, I can't remember now, but the Spurs moved 30 handles on where I can't say it was JP Morgan, but someone of that size had missed time something, and it moved to 30 handles in, like, I want to say 2 minutes, So it can be significant, you
Yeah,
know.
and it's interesting to note that the market's changing shape throughout time, and from the 2020 recovery, from the sort of COVID correction that we had, options became an enormous part of market participation. And so of course, some part of that is retail, but there's also greater institutional participation, and so you see that in a variety of ways. Now, from the index side, institutional participation, especially within puts and selling calls, that's always been pretty high. But on the retail side, what we're seeing is in equity, there's just an enormous amount, especially from 2021 on, in exposure to buying call premium and selling put premium. And actually, before we had the really big rout in stocks that started in October, some of those levels were off the charts. They were at never before seen levels for call premium bought and put premium sold in equities. Now, the index the sort of pace at which that activity has grown or stalled, that's pretty much almost flat in comparison in percentage terms. So it's really interesting to see just how much that's rocking the boat. And that's options now account for 50% more volume in the market than shares. So it really is, especially in certain parts, you could see it every day with some of the unusual flows that happen. Options really have become the tail that wags the dog of the market, and it's something we're going to keep coming back to because, as Andrew said, it's important. This moves the market. It also explains some of the things that could previously be seen as unexplainable, and especially within the last year. And that doesn't seem like that's a theme that's set to stop anytime soon. Is even though we're starting to see tapering and the talk of tightening in monetary policy, even though we've seen washouts in various parts of the market for the better part of this year, we've still seen ever increasing options participation. And so one of the things that people have pointed to of late is, oh, look at margin, and margin's actually been coming down ever since October. But people say, look at margin; it's near record highs in terms of notional dollars. That's great, but the issue that I take with that is margin as a percentage of total market capitalization is not near record highs. And so the real leverage that's coming into the market, and this is something Jem Carson has talked about as well, it's really coming in through options. And I think that's important to think about because it's actually, in some ways, in terms of the net impact, it can potentially be greater. And then on the other side of it, it also means that people can keep writing those lottery tickets, as they like to call them, over and over again. It might not
Right.
cost very much to do them. And so you see more and more of that participation. And if you win, then you're going to write 100 more lottery tickets and hope you win again. And so that's one of the mentalities we've seen. And it's nothing against retail or the institutions doing it. It just changes the shape of what moves markets, why, where some of the order flow is happening, and how that impacts what we're trading.
Well, and I think the other thing, the reason they become popular were two, the markets become more educated. The most uneducated retail investor is a lot more educated than someone just 5 years ago. But the other thing is the prices have gone up so much. And so options in fact, they could wag the dog in certain stocks more than others. And the obvious one to me is Tesla. Tesla, because it's $1,000, most people can't play it. Yes, they can buy 100 shares. One share. But with options, it gives greater use of your capital. And for a fund, even more so. In fact, you've seen big investors like Michael Burry and Elon Musk himself using options because it's a more efficient use of capital on the face of it. But you have to understand your Vega, which is what Alex is talking about, where it was in crazy what some people were paying. I mean, we talked about Upstart ad nauseum the other day, but it was 100 vol at one point, and they don't know what they're buying. They're just buying the offer. And the market maker, as I was saying, I was being the market maker. would get wider and wider because I know it's going to happen, and I don't want to take that risk. So you've got different elements of it, and the lottos is, I think what really made that was GME, of course, and then we've been fortunate with some of those stocks ourselves. Options, but that happens when. So you get two things here. One, people overpay, and then overplay, and then Then the sellers push them down too much, so they become too cheap. Coming from the energy world, we saw that many of the big natural gas moves come from that, because that's where it can be really deep in over the counter. And just remember, what you see isn't the whole picture. There's a massive over the counter market in most commodities, an EFP market. We have the dark pools market, as they call it in stocks, etc., etc. So again, be aware of all that. And if you're trading something and looking at order flow, understand what you're watching, right? It's not the be all and end all. And as I've said before, like Madav is very, very good at watching that on stocks. Individual stocks are the tricks that come in and play. And generally in the aftermarket, he'll have a bit of fun with that, for want of a better word. But at least in the options, you can look at the OI and work out where the risk possibly is at SUI. As I said, you don't know their positions exactly, but at least you know the optionality out there, right? So if it's in, I don't want to speak out of tune on SPX, but if I know there's a big line, if I'm looking at oil or gas, I know it's probably, depending on the time of the year, it can be 100 times greater than that on the OTC. We're talking thousands and thousands. So keep that in mind, and that's why the reason I promote charting or having a trading plan is I know where my risk is, at least. And maths, and a lot of these things are based on maths and algorithms. Algorithms are a blessing,
Could you tell the listeners about possibly how most options expire worthless and how to address that?
Yeah. So depending on who you listen to, but it's 85 to 90% of options expire worthless, which interestingly is also about the same percentage of traders that lose money. Because a lot of them, and it's a good word that Alex used, was lotto. So a lot of people buy them as purely as a punt, right? And they don't manage it. They might enroll it, or that they just let it expire, and with the hope they treat it as a bet, which probably isn't a bad way to treat it, right? Or a lot of them go on as purely hedges. So for example, if I'm long a stock and I buy a put in case the worst thing happens, I probably want to lose on my put, right? Depending on what you paid for it. But so, yeah, most of them do expire worthless because a lot of people buy them away along, they're hedges, so therefore generally they're going to be a long far away. But if you buy them too close and expire worthless, that's real money being lost, right? You know.
So what would you suggest as far as strategy to
Well, it
limit some of
depends
this
on your
risk?
situation. I trade a lot of options. I create a book. I believe I treat them as an asset. Um, if I'm so if I'm just a long-term investor, and the stock is ripping up and I want to hold on to it, remember you can always take profit. A lot of people fall in love with stocks, which isn't a good result. Just look at some of these charts. You would have been much better just taking profit. However, if it's something that produces income, Coca-Cola or just something that's slower, that's good return, then and as long as the volatility is high enough, you can sell calls for that. In a perfect world, you don't get exercise, meaning that's your balance. You got to find an option strike further away, far enough away that you don't get taken out, right? If you want to maintain it. But the Vol or the Vega, and you can get that off your thing, you need it high enough to justify to get taken out. So that's that strategy. Secondly, though, I will sell calls in a volatile market. If I'm long futures, long oil, whatever, where I don't mind taking profit, and if the vol's high, I can be getting $1.20 more on oil, or 20 handles more on S&P, or in some of these stocks what's one that's volatile right now? Like Roblox, I might get freaking $8. I mean, that's $8 of profit. Or when vol gets really high, I can sell, and Madavi I'll bring on to talk about this. I can sell something that's way out of the money that is very low to get hit for big money that's expiring very soon. But that's a whole different risk. You need to get your level 3. You have to understand all that and be approved. But that's the sort of strategies that I like. Now, the other one is you simply use them as a trading vehicle in place of the stock or the future because you have a more defined risk. But remember, you're not punting it. You're finding the right one, the one that has volatility in control, tight spreads, high liquidity. That's much more sophisticated trader. I wouldn't recommend someone not familiar with that. I think you get to that after you've become very proficient at trading the underlying. A good example would be Apple, as you know. So it's a more efficient way of doing it. Sorry. So Madavi, if you could talk a bit about some of that strategy you do, they're very.
Here's a great example, the best example that I ever thought of. When GME was running up to 400 or 500, they were selling the 900 calls expiring in 3 days for $6. And to me that's not a risk, but it could be a risk if it does happen. And you did it
there's
too
a
early.
negligible risk. Yeah.
Just imagine this scenario because they went from 50 to 450. So imagine was at 50, you go, there's no way it's going to reach 450, right? And it does reach it in that time period. That's the risk you're dealing with. And if that happens, you could lose a tremendous amount of money. So, but to me, when it's already ran 400 points, for it to run another 400 or 500 points in 3-4 days, is no risk. I was just selling naked calls. And I do that with a lot of biotechs too. When I let them run out and stretch as far as they could go, I don't just do it right away. You got to wait for it.
Yeah, you got to wait for the signs. And options relate later. I mean, not as instant.
And take the farthest out number you could get that they offer and see what devolves on it. If you're getting a nice premium, hit it every time.
Yeah, and remember, you build that premium into your basis, right? So as that vol, because the vols, so remember that's telling you how high the vol is. As that vol concaves, which is what we were talking about earlier, I mean, it's a different thing, but on what Alex was talking about, JP Morgan, as vol collapses like it has, it's well worth their while probably to buy it back, and that's risk that's almost at the money. But in that situation, that $6, as I remember that trade, they went from 6 to 150 almost within 8 hours or something, right? As soon as it stalled. And it gives you an idea how much people overpay for things, right? That's just FOMO trading, you know. Does that answer some of your questions better, Johnny? Johnny, where is Johnny? Is he off trading his Bitcoin? So yeah, and
Yeah, it looks like he's otherwise occupied right now.
He went to the metaverse. The
He's
He
over
metaverse.
may
the
have
metaverse.
teleported over to the metaverse to buy some premier real estate there. I heard there's a little bit of a sale with crypto where it is, so you get some good deals right now. But
Let's
you
have a
know,
look at crypto figuring how that's doing today, because it got sold off hard yesterday. Let's have a look at our little crypto chart.
Yeah, I actually put some charts in if you want to pull them up.
oh, there he is.
Oh,
How's
did
it
you
going,
do
my
your
friend?
land deal? So Bitcoin is down just under 1%
Bitcoin is
now.
down.
Ethereum's down 2%. Binance is the third biggest one. That's down 287. Yeah, so pretty well everything. Solano's down another 2%. Cardano. The USD
A lot of
coin
this,
is up. That's the only thing up. And
a lot of this
Polygon.
and that's a stable coin, so it doesn't really count even. But a lot of the long duration risk is more rate sensitive. Real rates rose again today across the board, especially on the 30-year. And so it's really a situation where there's some tightening that's happening, and so people are taking a little bit less of that longer duration high beta risk. I think real rates right now are almost at their highs, especially in the 30-year for the month of November.
Well, here's what I'm thinking. I spoke
Yeah,
to
there's
a friend
different
of mine.
opinions on what's happening right now. Some are saying that there's a pattern that's formed. If you go into the screen that I put into the crypto, if you go into the crypto room, you'll see a
Well, while
couple
I'm looking
things.
at that, I had an interesting call from a buddy of mine who puts a lot of money on Vegas, like bets this time of the year on Vegas football. The bowl games and NFL's playoffs are coming up, but mainly the bowl games, right? College football. So you can obviously bet there legally. We're all aware of that. So it's in the crypto rooms. So anyway, he has noticed over the last 3 years that crypto sells off in the last week of every year. His theory is because a lot of the punters that he, has a few quiet ones down there in Vegas. They actually got to go to Vegas to play the bets, or they pay someone to do it. Anyway, his theory is that a large proportion of crypto is that type of money, and a lot of it gets sold off and gets. And he's not straight out saying it's money laundering, but here's your thing. Do you see that?
So yeah, so the one thing is they're looking at the halvings. So if you look on the left-hand side, you see the halvings, and you see on the bottom here that it gives you the time. Okay, so or the price down the bottom. So if you go up and the blue, the first halving that they had was a 54x, and they did the first halving, and then if you go down to the red line, the second halving, they ended up at 34%. I think I can't really see it on the thing here.
It's the second halving, 9th July 2016, 658. First one was 12, and the third one was 11th of May 2020, and it went to 8572. So explain what that actually means to us.
So the halvings are basically where they cut the supply. So it's baked into the formula and the rules that Satoshi had when he set up this whole Bitcoin thing, that there'd be halvings every 4 years, or there'd be less supply. And when there's less supply, the price goes up. So it's one of the things that makes it more of an asset that's very similar to gold. They call it very similar to gold.
Hang on, you're saying
crypto.
you're comparing Bitcoin to gold?
Yeah, well, they consider it digital gold. I'm sorry, not me. I am just letting you know what a lot of people consider it because of the way that there's a finite amount and there's less and less supply. So these halvings have an effect. But if you look at the chart here, you can see the blue, how it went up and then it came down and it finished at 54, the 54x on the far right-hand side. And then the second halving, it went up similarly, but it's right after the beginning of the year, as you were saying. So right now you can see where we are with the white line down at the bottom, kind of coming down. And right after the beginning of the year, they're looking for it to go up as it has in the previous years. You see that?
Yeah.
So if it goes up, they're thinking that it should end up at least at 6x. So we're hoping that it can go up more, but realistically, it could go down lower too. So there's the pattern of which this halving effect is putting on the market, and there's also main people out there like Sawyer. I don't know if you guys know who Michael Saylor is. I'm sorry, Saylor. He's saying that it's going through a cycle of adoption. And then you've got Ron Powell. He's another guy out there that he has a lot of Bitcoin. He's a big advocate. And he's saying that the growth slows based on inflation. And he sees that the inflation is going to have an effect on Bitcoin and the way that people can't get money from banks. So they may have to take money out of their Bitcoin. So there's different theories going on right now as to what's happening, but the market will dictate, and it will end up being what it is.
Right. Well, thanks for that. I was not aware of that, but so that's interesting. My buddy may be right on his theory then.
I mean, the chart shows.
Yeah, I mean.
Right after.
Yeah, he's also alluding to the punter that does that, right? So before we finish up, and let's have a look at Apple. So you can see Apple's got that identical bull market flag. Oh, sorry, there, potential bull flag. This is on a hourly and a 4-hourly that we saw on the SPOOs, but it's building this energy just under that all-time high. So, and you look at it, there's the SPOOs. So you can see they're very similar, right? When they're both similar, it's usually a pretty powerful thing. So, obviously not if Apple decides to drop a bomb. You know, what was that one? What was that? The bomb not long ago, that fear bomb. Bloomberg ran this. I think it was Bloomberg. There's a story
that their demand was falling for their products.
No, that they weren't getting enough supplies. It was true what they said, but the market misinterpreted, I think. Well, they didn't misinterpret it. It hit the algos and fell $5. Beautiful thing. But yeah, so there's shortage of supplies, so therefore the demand of whatever number their current phone is because it's been so long for delivery, it goes to the next one. So it wasn't as if they were losing current demand, wasn't it, for their current phone, whichever one they're selling now, and for the next one, people decided, this is taking so long, I'm just going to buy the next one. So it was upgrades. It was components for their phone anyway from China, I believe, because of the supply crisis. But Bloomberg ran the story, and I think it was basically unnoticed, and then it got republished. I think that's what you're referring to. Republished like early in the morning, and then that set the algos off. Yeah, it was a source's story, of course, like they all are. Yep. Whatever happened to someone actually saying something? You can just pretty well say whatever you want. Is what that means. It's an old thing that you used to only see in the sports world, but now you're seeing it in the finance world as well. So yeah, does that answer all your questions? We try to answer them best on options there, Johnny. Sort of things we look at. And I certainly with options, as you said, a lot of them expire worthless. So overall 80%, but if you
I think there's also a lot of people out there that can't just sell calls.
Well, there's a reason
limited.
why, right?
Right. And I think a lot of the newer traders can't sell calls or puts. They have to.
Well, you have
to call and put.
Yeah. So basically, I don't believe anyone should be allowed to trade anything until they're properly educated or understand what they're doing. So that be it whatever, stocks or whatever, As far as options and futures go, they're a lot more stringent on who can trade them because there's unlimited risk if you're a seller. Like on futures, there's unlimited risk, right? You can have limit ups, limit downs, and despite you might think you're a millionaire today, you may be bankrupt tomorrow if you're the wrong way around on something, if it gets limit down. And I've heard some terrible stories over the year, particularly in the agricultures. As far as options goes, if you're the seller, so if you're selling a put, you're limited to what you can lose because it can only go to zero. It can't go negative. We're talking about stocks. Futures can, as we saw with oil. On the top side, though, in theory, and that's what my dad was talking about on the GME, in theory it can go up forever. But in reality, that you get out your bell curve and you work it out. But to be able to sell a naked call, you have to be a level 3, I believe, in options. So that means you understand the risk, you have experience in trading those options, and you have the financial ability to cover the said losses, right? But yeah, and what we've all been talking about today, and Alex in particular was talking about how people just buying the offer rather than actually buying the price that it is. So it's a market maker's heaven in the sense that he can then quickly cover the stock, right? But that's why they expire worthless, is people overpay for them. So they're paying for that cost that doesn't have an intrinsic value. It's just time, which is the theta or the interest component of the rho or the Vega component of the volatility rather than the underlying stock price. So if I buy, what stock we're watching right now is Micron here. So it's $96, right? So if I pay $96, I've got $96 worth of stock. That either goes up or down, and I lose on it, either or. If I buy an option, I don't have that intrinsic value unless it's at or in the money. And little things like that are pretty basic. So we will do more and more on that, but get that basic understanding if you're going to trade options, please, people, and you'll be better for it. And some mindsets, some personalities should not trade the more esoteric products because if they're more, because you got to not be prone to get too risky, I guess, because you're going to add more to it. But that's about it for today. We've all, I think, covered everything pretty well in a nothing market. Hopefully, we've answered everyone's questions. Those levels that we've been looking at, they really haven't changed since the weekly report. So you can go back and look at them. We've pretty well covered everything that's out. Enjoy your evening. We will see you tomorrow. Trading is winding down more and more. There will probably be one more ramp attempt. I'd be surprised if there isn't, given it's the end of the year. So thank you, everyone, for listening, and thank you for everyone for joining us. Check our socials out, which are on the description, Traders.com, Market for Mayhem, Meta Johnny, NovaWave, Madavi4, and the websites. If you enjoy it, please like and share and subscribe, and we will speak to you and see you all later.